This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
Industrial real estate, particularly, you have to be thinking on the long term with it. There's not a lot of opportunities to get into industrial real estate and flip it and make money after a year, 2 years. There's probably people that have, and they're probably singing the praises of doing it. But my standpoint is that industrial real estate is a very conservative investment that if you hold it over a long period of time, you'll make some really good returns. But to hold it over a long period of time, you have to have faith in that market. So to your point, absolutely. I think location is critical when you're making your investment decisions.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. As either a passive or an active investor, once you develop a focus and you're able to run your real estate portfolio effectively, you may want to consider investing in industrial real estate to diversify your portfolio. Now, today's guest knows a great deal about industrial deals. He has over 15 years of experience in industrial real estate and has completed over 500 transactions with clients ranging from local companies to large institutional investors. Now, as an experienced industrial real estate broker and partner at NAI Commercial Real Estate, he says that industrial real estate is perfect for people who are looking for steady returns and consistent rent growth without the volatility. He shares his knowledge of industrial as the host of the Industrial Real Estate podcast that can be found on all the popular podcast channels. Now, with all that, let's welcome Chad Griffiths to the show. Chad, thanks for coming on, bud.
Hey, thanks so much for having me on. I'm excited to talk about everything industrial real estate.
Yeah, me too. Looking forward to learning a little bit more about it. Now, guys, like what Chad has to say, you can reach him via his LinkedIn page. We'll include a link in the description. Okay, Chad, go ahead and tell listeners a little bit about your background and how you got started in all the industrial stuff.
Yeah, thanks for that. So I actually stumbled into industrial real estate. I did a year of residential real estate in 2004 after buying and selling a few residential properties, and it just wasn't for me. I just didn't like the residential agent lifestyle. So I talked to a few people, got introduced to a commercial brokerage, which I ended up joining in 2005, and I've been there ever since. But my intent was I thought I'd be selling like office towers or retail shopping centers. I didn't even know much about industrial, but the office that I ended up joining was heavy in industrial. So it just happened almost accidentally that I stumbled into it in 2005. And I'm very grateful that I did because it's been an awesome experience over the last 15, 16 years now. And so being a broker for that time, I started investing myself in 2014. A partner and I bought a small industrial condo, which a lot of people are surprised at how easy it is to actually get into industrial when they think about these big distribution centers being unobtainable. There's also a lot of smaller properties. So I got my entrance by buying a small industrial condo, and then since then have grown it to a fairly sizable portfolio. Just removed conditions on a $4.1 million building last week, actually. We're going to close on that in the next few weeks. And I think that takes our portfolio to about 18 million right now. And I've got partners and all of that, and we've got debt on it as well. But we've got a fairly sizable portfolio, and we're just actively looking to grow it as well.
Excellent. Great. So now for the people that are listening, what is industrial real estate? How do you classify that?
That is such a great question, because I asked myself that same thing in 2005 when I realized that the majority of my office was involved in industrial real estate. I asked that as well. Well, what is this thing that I'm going to be working in for my career now? And over the years, I think I've been able to simplify it, because it can be a very overwhelming topic, especially if people don't have any familiarity with it. It can almost seem like this obscure asset class that's tucked away in these industrial parks that nobody's familiar with or has any knowledge of, I think I can distill it down into there's three main property types for industrial, subcategories, if you will. First would be warehousing, and we're probably all familiar with that, with these big distribution centers like Amazon coming into virtually every market now. These are the big buildings that are probably close to an airport or off a major road. And if you can just picture a building with racks and racks of storage, those things essentially come in, they get stored, and then they get shipped out. And then a comparison that I always use is actually just a Costco. If anyone's gone into a Costco and just really looked around, that's essentially just a really big warehouse. It's got 24-foot ceilings. They have racking all the way up. It's really just a big warehouse in a retail location. But that is what the warehouse is. So that's one of the major subcategories. Second would be manufacturing. And those are just big properties where things are made. And an example I give all the time is the Boeing factory just outside of Seattle. It's 4 million square feet, and the whole purpose of that building is all the raw materials come into the building, it's assembled into an airplane, and then the airplane goes out. That's a big example of a manufacturing property. So it can be 4 million square feet all the way down to 2,000 square feet, like an industrial condo, the one that I first investment that I made. And then the third category is kind of a catch-all. It's usually called flex industrial. And that's all the industrial properties that don't neatly fit into like either a warehouse or a manufacturing property. So you look at a car dealership is a good example, right? A car dealership has a showroom at the front, and then they've got a big warehouse at the back where they do all the work on their cars or store things. So that's a good example of a flex property. But those generally would be like the three subcategories of industrial that the vast majority of industrial properties would fit into one of those three.
Now, I imagine, though, that the location of these properties, I mean, you mentioned something close to the airport. I imagine for like an Amazon, that kind of thing, where the goods are going to come off of an airplane sometimes, most likely off of a ship or something like that if they're coming in from overseas, then stored at somewhere near an airport, and then eventually shipped off to the end customer, the end user. But whenever I think about industrial, and it conjures up images of like very industrial looking type of areas where there's no homes, no houses, nothing like that. It's all like, then here in the Midwest, you see a lot of that, right? Because, all this stuff was built here in the turn of the century, turn of the last century anyway. So what does industrial have any type of specific area? And if so, how does that impact overall valuations?
Yeah, fantastic question. And I've been to Ohio, like we were talking about before the show, and you're right that a lot of that was because of the Industrial Revolution. That's what spurred a lot of that development there. And for the most part, city planners play an integral role in how cities are actually developed. And a little bit of a cat and mouse game, because for some of those established areas where the industrial just sprouted out without any orchestration or any planning, it's a little bit sporadic. But for the most part, what city planners try to do is they actually have designated zones. So they'll have a residential zone, they'll have a commercial zone, and they'll have an industrial zone. And they try to keep those separate for good reason. A lot of these industrial buildings will just have noise, or they might have odors coming from it, or different things. There might be a lot of vehicle traffic, like big trucks coming in and out. So they want to keep that separate from the residential area, and rightfully so. Nobody wants to look out their bedroom window and see an 18-wheeler coming and going at all hours of the day. So for the most part, cities have tried pushing all the development for that reason. And I'm guessing in Cleveland or my market where I am, if you look at a map of the city, our industrial areas are clustered in two major areas. And then there's a few areas much smaller areas which are scattered throughout the city. But for the most part, the vast majority of the industrial real estate is plotted in these big markets, and they're separated from a residential. Either there's a major road that separates it, or the city will try to have some kind of buffer in between those industrial and residential. And all that contributes to why a lot of people just don't have familiarity with industrial. Unless you had a reason to drive through one of these big industrial parks, whether you're picking up something like picking up a part or picking up something, or perhaps you spend a small amount of time working in a factory for something. Most people just have no familiarity with these industrial zones at all. So it really is something that requires an active amount of learning to figure out what it is.
Right. Well, and speaking of that, then, so can you go through some of the basics then to understand the industrial real estate? Like, how do you even begin to unravel all that? I mean, I can tell you that from my perspective, I live downtown Cleveland. You can see remnants of industrial here still. Like many of these old factories, these old warehouses that were once like owned by the Port Authority here. From they would be unloading stuff from ships and storing them, are now multifamily, right? Yep. There's areas up the river here that are going to be converted eventually to multifamily as well. So there's a lot of this conversion stuff. But I mean, as far as trying to understand the basics of a true industrial scenario, I mean, how do you even begin to unravel all that?
A fantastic question. And I think we could break it down on, and if I was coming to Cleveland, on how I would analyze it. Maybe that's like an easy way to start on this. So the first thing, if I had no knowledge of industrial real estate, is you just first need to understand what industrial real estate is, how it's built, how it's positioned, what the ultimate goal of these industrial properties are, and that's to cater to the companies that ultimately need to rent them. So you just need to have a good understanding of all the different components of industrial real estate. What are the loading doors? Do people need to drive their vehicles into the building, or do they need to back up like a loading door, like a semi-truck backing up? Are the ceiling heights important? How much power is to the building? What power do the tenants need? How's access to the building? You asked a question about being strategically located to an airport. Is that important for a company, or can they be in an industrial park and not need that convenient access? So just getting a really thorough understanding of what industrial real estate is would be the first step that I would have. And I went through that relatively quickly for time, but you can appreciate that there's a lot more to it than just those small snippets that I mentioned. But you need to get a really deep understanding of what industrial real estate is. The next thing I would do is I'd just start intimately getting to know the Cleveland industrial market. And to do that, I would start going on to some of the big brokerage websites. I'm assuming JLL, Colliers, Cushman Wakefield, Avison Young, NAI are all in your market. So I'd start by going through all of their market reports. They almost all put out quarterly reports where they'll talk about vacancy rates, absorption rates, what big deals have happened recently. And just by going through the motions of seeing what the activity is, you're going to start seeing a lot of patterns. And once I have established that high level information from these brokerage reports, I'd physically start driving the areas. So I'd just spend a Saturday or Sunday when these industrial parks are just quite slow, spend an hour, 2 hours every weekend just driving up and down the industrial parks. And even though I've been doing this for 16 years, I still do this periodically in my market. It's not every week, but probably once a month. I just physically drive an industrial park. And you just see so many things that you might not have otherwise noticed, and especially if you're deliberately paying attention to it. You see a company that might have just moved out. You might see a for sale sign on a property that you didn't know about before. All the different intelligence that you can get that other people just won't have if they're not taking the time to drive through there. So it's an onerous task. It takes physical work. You can't just do it from a computer. You actually have to go and do it. But I think you could appreciate that and this isn't a quick process by any means, but I think if you can appreciate, you get to understand what industrial real estate is, have a thorough understanding of that, start studying trends and developments that's happening in the market by going through these market reports, and then actually start driving industrial parks regularly, you'd get a very good grasp of what the market is in, I don't want to say a short period of time, but within a decent period of time where you'd be much more comfortable about what the industrial market is.
Yeah, I think part of it is that driving for dollars, that's the equivalent that'd be in our, yes. When it comes to residential real estate, right? Driving for dollars. I think that when it comes to a guy like me, and we own a lot of multifamily, we buy a lot of multifamily, and we know that line of business very, very well. I guess the need for housing is one of those innate things, like people, you just got to have it, right? You have to have it. And we look for a certain price point. We look for a certain person to live and live their lives in that unit. I guess when it comes to industrial, though, the thing that I often get hung up on is what sort of company is going to move into a place like that, right? And to me, it seems like it would take longer for for that to actually happen, right? So as opposed to like, you can get units turned and filled up fairly quickly if they, in a nicer area, the type of assets we buy anyway. But I mean, do you have the same sort of struggles when you're dealing with industrial? I mean, is it tough to find the people to rent those places out?
Yes and no. I think we could even compartmentalize this to look at it from a couple of perspectives. I think the fact that you're a very sophisticated and successful investor who's unsure of industrial real estate is common, and you're at the top echelon of investors already. You can appreciate the guys that have only owned maybe like a 10 unit or a 20 unit, how daunting industrial real estate can seem in comparison. So I think that is actually one of the opportunities in industrial real estate, is that there is that barrier to entry where there's just not a lot of people who are familiar with it. So if you're going into it with being afraid of it, I always say that having a healthy amount of fear is actually good in industrial real estate. And it's almost contrary for a broker to say. My primary job is being a broker, but I think industrial real estate should scare people because it's not familiar. So when you're asking a question like what companies are ultimately going to lease it, that's a common question that investors, especially new industrial investors, have all the time. And I think if you go through the activity of just driving through an industrial park, and like I'd even encourage you, like if one Saturday you happen to have an extra hour, is just drive through an industrial park and just start taking note of all the different types of companies that you're going to see, and you're going to see companies that you never knew existed. We just did a deal with a company in our market which services arcade games. Which I had no idea that there was a business for this in my market. I'm so 16 years in this business, I still find companies that I had no idea existed. So all that this company does is arcade games that the circuitry or something breaks down on it, they get shipped to this warehouse. These guys tinker with it. If they have to replace a motherboard or whatever they have to do in there, they fix it and then they send it out. And they had 100 or so different of these big consoles for like an arcade, these big things in there. And that's all that they did. So I would say, as just an experiment, just to even understand like the wheels of commerce that are happening in your city, to really get a deep understanding of how broad it is, just do a drive and just start taking note of how many different types of companies you'll see. Because you'll see all the big ones, you'll see like the big manufacturers or the big distributors. Those ones are all top of mind for a lot of people. But once you start getting deeper into an industrial park, and you'll see so much. I'm in a market, just to draw you how broad this is. I'm in a market of about a million people, and our industrial inventory is 150 million square feet. 150 million square feet. And so if Amazon takes up 2 million of that square feet, there's still 148 million square feet more. And it's a lot of it's taken up by other big companies. But then you've got companies like this arcade company that takes up a chunk of space. In our building alone, one of the buildings that we own where our office is actually, and it's an industrial building, but it's more of a flex because our office is in there. We've got a hot tub company in there. We got a company that sells equestrian supplies, so like horse saddles and stuff. And then we've also got a cabinet company, so they manufacture their cabinets in there. So you wouldn't think of those three companies occupying an industrial building, but that's what you can find in there. So I'd say that the first thing to do if you're getting into industrial is just understand what it is, because that's a very valid question to ask: is who is actually going to lease this? And I'd say one opportunity with industrial real estate is that quite often you'll get 6 to 7 months notice that the tenant isn't going to renew their space. So you buy a building, tenants in there, they give you notice that they're not going to renew. You probably have a 6 to 7 month window, if not even more, to find another tenant. And that's a pretty good lead time to actively market the space and find another tenant. So definitely drawbacks, definitely things to be concerned about if you're an investor, especially if you're new into industrial. I'm a big believer in protecting your downside risk first and foremost. And to do that, you should have that little bit of fear, because having that fear helps you think a little bit more critically on mistakes that you could make. But it also helps prepare you for the scenario where you might have a property that's vacant longer than you want. And that could easily be just a drawback of industrial real estate compared to multifamily.
Yeah, because I can tell you that Number one, always work with a broker, like no matter what. I mean, we work exclusively with brokers to buy our multifamily stuff. That's how we do it. They're the ones that find the deals. They're the ones that sell the deals. I don't mind paying the broker commission. I'm fine with it, right? Because they actually deliver value. But I guess the second thing though is that location. It's funny because I have family in Detroit, right? And Detroit, Dearborn, in that area, a lot of industrial there, from the industrial age. There's buildings that have been vacant for decades with a for lease sign outside, or seems to be a decade anyway. And I'm like, man, I kind of imagine the person sitting on that asset is just bleeding right now, right? I mean, unless they own the asset, but even then they're paying taxes and insurance and whatever. So it seems to me that either that broker's not doing a good enough job, or that market is just so terrible. And I'm using probably the worst example is Detroit, but there are other places that are not so hot that just sit there for lease forever, right? So picking the right market sounds to me like it's absolutely critical, right?
Absolutely. And Detroit is a fair example because that is a market that was thriving for decades until their downturn. And I wouldn't say it's even just industrial. I think that there's a ton of properties of all kinds in Detroit that, are essentially worthless. So warehouses, manufacturing properties in Detroit certainly aren't exempt from that as well. I'm guessing not only are those owners bleeding, but they've probably bled out already. There's probably not a lot there. But yeah, I think that's a fantastic point. Is industrial real estate, particularly, you have to be thinking on the long term with it. There's not a lot of opportunities to get into industrial real estate and flip it and make money after a year or 2 years. There's probably people that have and they're probably singing the praises of doing it. But my standpoint is that industrial real estate is a very conservative investment that if you hold it over a long period of time, you'll make some really good returns. But to hold it over a long period of time, you have to have faith in that market. So to your point, absolutely. I think location is critical when you're making your investment decisions.
Yeah. And also reviewing the lease too. I mean, one thing that we're doing is net lease. We talked about it in the green room a bit ago, and it sounds like it's very comparable to the whole net lease scenario, understanding what's in the lease and what the renewals look like, what the extension period looks like, what the renewals, all that stuff, what all that stuff looks like. It sounds to me like industrial is the same sort of thing because these leases are going to be very, very unique. Even if it's the same company, the leases are going to be totally different, right? It's not just one boilerplate lease. Does that sound about right?
Yeah, absolutely. I've seen leases anywhere from 18 pages up to 80 pages, depending on who was involved on both sides of the transaction and just how complex the deal was. But I think that actually is a really good benefit. So I'm happy to always talk drawbacks and benefits with industrial real estate because I think it's important to have that full picture. But one of the benefits that I see of industrial is that you can have really long-term leases. So that it's not uncommon to have a 5, 10, even longer lease in industrial real estate. And if you own a property where it's just a single tenant, so let's say you buy a $5 million property and it's leased to one tenant, if they have a 10-year lease, you conceivably might not have to do anything on that property because it might be the equivalent of a net lease. And I think that that's one of the major benefits of industrial is that for the most part, and it can vary across markets, so I don't want to make it a blanket statement. You always need to check the lease in your individual market. But for the most part, leases are structured that the tenant will pay a net rent, so that's the amount that goes to the landlord. Then they also pay for the cost of operating the building, usually called the operating costs or the additional rent. And the reason that that's structured that way is that when you have these long-term leases, if you were to lock in a lease rate for 10 years and something happened, property taxes escalated more than you expected, or the management fees went up more than you expected, that would quickly erode the amount of rent that you're getting. So to combat that in these longer net leases essentially is that the tenant pays a net rent, that's the contract amount that they pay for the entire term of the lease. It can be a static number, like call it $10 a square foot, or there can be yearly escalations in there. But the intent of that is that's an agreed upon number at the beginning of the lease. Then they also pay for the operating costs of the building. So if property taxes go up, those costs get flowed through to the tenant. So that way the landlord has a really good understanding of what their cash flow is going to be, and they have the certainty of knowing that any expenses that come in that are necessary to run or operate that building pass through to the tenant. And in that way, you actually have some really good predictability on what your income is going to be for a long period of time without that turnover that can come from, and I'm sure you're very experienced in this in multifamily, where you might be turning over tenants, especially if you own a 100-unit building, you might be turning over multiple tenants a month. And so just the management fee, the management intensity of that is a lot more than owning, call it a single industrial building where the tenant's in there for 10 years. So definitely pros, definitely cons of industrial real estate, but I think one of those pros is just knowing exactly what your rental income is going to be for a predetermined amount of time.
Yeah. Now, as a guy that does multifamily, and it's funny because we bought a bunch of assets from another gentleman that has a lot of multifamily. He's getting into industrial now. What are 3 solid reasons why someone ought to be considering doing the industrial thing? Like what should I be looking at, or what should people be looking at in general?
Yeah, a great question. And for him, he must feel very comfortable with the market to be transitioning solely out of multifamily into industrial. That's a bold move. I think either he has experience in it already, or he just has some insider track, because I think going from one asset class and cutting it cold turkey and going to another one that also comes with a certain amount of risk. I think that the biggest thing that I would say is that because there's barriers of entry to get into industrial, all the reasons we talked about people just not being familiar with it, that leads to higher returns. And just speculating on cap rates, if we could jump into that briefly, I don't want to, again, paint a broad brush all across North America, because every market's can be a bit different. But what I've seen with a lot of cap rates for multifamilies in that 3.5% to 4% range, and maybe it's higher, maybe it's lower, that's cap rate that you're buying multifamily at. Whereas in industrial, and again, just broad numbers, you're kind of buying cap rates in the 6.5 to 7.5 range. So there's just an opportunity to make better returns in my mind. And I've owned both. I've owned some multifamily and I've owned industrial, and the industrial portfolio has always outperformed residential, unless there was a big growth in just that residential multifamily values. But then you're relying solely on appreciation. So industrial, I've even made money in industrial in a downturn, just because it was cash flowing every month, and the rent that I was collecting was a higher spread over my debt. So I was still making money even in a downturn. So I think the opportunity to make better returns is a reflection of that barrier to entry. But if you're willing to learn what you need to learn to get into it, I think that's a huge benefit. You're just going to outperform other investments. Again, I don't want to make that as a statement that you are guaranteed going to outperform it, because there's investments where you could lose money on either side. But all things being equal, if you're a prudent multifamily investor or a prudent industrial investor, I think the industrial one will outperform. And then the long-term nature of the leases, to me, that's a huge thing. That first industrial condo that I bought in 2014, we had a 5-year tenant in there, and then we've moved that over. We got a new tenant in there. Like, first guy closed down his business. We had him in there for 5 years, and we probably had to go to that building. My partner and I, we probably went to that building in that 5 years 10 times maximum, and that'd even be a stretch. So it's a lot more of a hands-off investment if you're doing it right. And for multifamily investors, I think that probably does create especially if you don't have the infrastructure. Like I'm guessing you've got a full team and you've got support systems for it. But for a small multifamily investor that owns 20 doors or 30 doors, they're probably dealing with that stuff on a day-to-day basis. Whereas industrial, in 10 years or 5 years, I probably went to that building myself 5 times, and my partner went to it 5 times. So I think that's another benefit. And then I think also it's a really good long-term strategy. I don't see industrial real estate slowing down anytime soon. There's huge demand for it right now. Some markets like LA or New York, they're sub 2% vacancy rates right now. So there's a lot of demand. Supply takes a while to catch up. I'm still just bullish long term on the industrial market. So those would be kind of the main reasons on it, and there'd be other minor ones as well. I love the asset class. I'm just very passionate about talking about it. So that for me, I kind of think if you invest in something you're passionate about, you're always going to be like that much more enthusiastic about it. But that the opposite could be true, where someone buys a warehouse and their tenant leaves after the first month. They might hate industrial real estate. So there's trade-offs for sure. But having done both, I would do industrial 100 times out of 100 before I considered multifamily again.
Right. Yeah. Well, yeah, that could happen at any given time. Right.
Yeah. So
same thing with multifamily. It's there's been cases where the gentleman I know bought a multifamily asset, did his lease review, discovered that half the tenants worked for the seller in one of his businesses. So the day of closing, that seller basically fired all those people. I don't know why he would do something like that, but basically he went from a 90% occupancy to a 50% occupancy. So yeah, I mean, all this stuff can happen in any type of business.
Yeah, very true.
Doesn't matter. So what do you think the outlook's going to be then for the next maybe 12 to 24 months?
In the next 12 to 24 months, I think demand is still going to outstrip supply. That's the trajectory on this right now, is that everything seems to be looking quite positive that companies are going to continue needing space. So I suspect that the next 12 to 24 months are going to still be quite vibrant. If I had a lingering concern, it would be extending beyond that, because we will overbuild as an economy, as a North America in general. We will overbuild. We've shown a propensity to overbuild in every asset class that has demand outstripping supply. So that will happen at some point down the road. Vacancy will uptick just as a result of more supply coming on the market. It's actually very unhealthy right now, especially on those coastal cities where they're having sub 2% vacancy rate, and even inland. Like I'm guessing Cleveland's probably in that 5 to 6% vacancy rate right now as well. That's still like a really low vacancy rate for a commercial asset class. So even if we see 100, 200 basis point increase in vacancy rate, I don't think that's going to take the wind out of the sails, provided that developers don't get so greedy and aggressive that they add too much supply. That could be the concern going forward. And I think the other potential warning sign would just be the economy in general. Like we're riding all-time highs right now in everything. Wages are growing fast. Household income is growing really fast. People are sitting on a lot of disposable money. That's all fueling this aggressive economy that we're dealing with right now. I would have to think at some point this has to slow down. And if that's the case, industrial, like everything, could be affected by it. But I'm very optimistic that there's always going to be demand for industrial real estate. And again, just take a drive through any industrial park and you'll see all this activity and all the different companies that are behind the scenes. I'm still bullish long term, but I think beyond that 12 to 24 months, there could potentially be some road bumps along that way.
Yeah. Oh, like anything else, you have to really exercise an extreme amount of caution when you're getting into these deals. It's on the development side. Yeah. I mean, we're worried about overbuilding too. Our projects are fairly small, and for this purpose. So we're usually keeping them anywhere between 50 to maybe 150 units, somewhere in that range. So they're not gigantic. They're fairly small, easy to build, get done fairly quickly. Get them done, lease them up. So and I would imagine when it comes to industrial, you probably want to have the same prescription. It sounds to me like maybe not go into these gigantic industrial spaces. It sounds to me, right? But I mean, I'm not a pro at industrial, but that's what I would guess.
Yeah, definitely not for like smaller, medium investors like myself. A lot of that bigger industrial is institutionally owned, which I'm assuming a lot of multifamily is as well. It's like especially like the big complexes. So if you're looking to buy like a 1 million square foot Amazon facility, you're competing with institutional money, which can just do things that you can't do. So I am not an investor of that scope myself. I like those small, medium properties where I can be relatively diversified. And if one tenant leaves, it's not going to bankrupt me because there's other tenancies in there, or I'm confident that I can backfill it with another tenant. I like to sleep at night. So having that type of a risk overhead where, can you imagine you go and buy a $5 million property that's leased to a single tenant. And I use that example as a pro, but it can also be a con. Imagine you have that $5 million property with one tenant in there, and that tenant goes bankrupt, or for whatever reason, just something happens where they can no longer rent the space. And now you're left with all the expenses that come with that. All those operating costs that we talked about, and now you have to pay. You've got your debt servicing on there. You have no cash flow coming in that you might have been using for other things. That's a very stressful situation as well. So I think whatever any investor does, they've got to be confident on that downside risk. I'm no redundant by saying that, but what happens if that tenant leaves? How confident are you that you're going to be able to sustain that indefinitely? Hopefully it's not like 10 years like people in Detroit see, but how long can you sustain that for worst case scenario? And provided you have that level of comfort, and like you, I'm a very conservative investor as well. I like knowing that if the worst case scenario were to happen, I can still make my way through it. And providing you do that, you can hold real estate for the long term. I just think it's such a great investment vehicle.
Nice. Good. So we covered a lot of stuff here today. For someone listening, what sort of bulletproof advice would you have for them?
Same thing that you mentioned earlier is hire a broker, and hire a broker that is a specialist in your market. So if you're looking in Cleveland, or if you're looking in Colorado, hire somebody that, maybe Denver to even be more precise. So if you're looking in Cleveland, you're looking in Denver, hire a broker that is exclusively devoted to that market, because they're going to be able to show you and teach you so many things that you just might not see. Almost consider it as someone to help protect your blind spots. And having a broker in your corner will be invaluable as you're getting started. If you grow your portfolio, you might get to a level where you feel more confident doing it yourself. I always think that there's a spot for a broker in that transaction as a necessary part of the team, but especially at the beginning, just hire somebody that knows that market intimately and can help guide you through the process. I've said it probably a few times, industrial real estate should scare you. And if you have a guide, so a pilot on the airplane, call it, it'll make that trip a lot easier than trying to navigate it yourself.
Yeah. I know you cover some of this stuff on your YouTube channel too, right?
Yeah, and I know I probably talked fast on this interview because I was just trying to pack a whole lot in. But as you could appreciate, there's a wide amount of stuff that people need to know if they want to consider industrial real estate. So I set up a channel about a year ago just to talk about my journey in industrial real estate, trying to teach people a little bit more about what properties are, what they should be looking for in a property, how they should be approaching it as an investment. And I've also just done some interviews with industry experts like economists and industrial real estate owners, just to paint that full picture on the spectrum. So if they just search industrial real estate on YouTube, I think I'm the only one that's regularly producing content on it, or just search my name, Chad Griffiths, and my videos will show up. And appreciate you checking one out.
Nice. Good. All right, guys. Well, if you guys want to reach out to Chad, you can reach him via his LinkedIn page. Of course, go to his YouTube channel as well. We'll have both of them in the description. I hope you got some insight on industrial. Certainly very interesting business model, different asset class. Definitely be scared if you're getting into it. I think it's having a heightened sense of awareness is certainly going to be very, very important when you're getting into anything new. But by getting the right people around you, you can reduce the mistakes or eliminate them altogether. Thanks for tuning in, and I'll see you next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, hit up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.